Welcome to this Energy Quick Chat where we rub minds with stakeholders in the energy industry. I am Justina Okechukwu. Some relief for motorists and households in South Africa after the Department of Mineral Resources and Energy announced the price of petrol will drop by 71 cents per litre, diesel will fall by 80 cents, while illuminating paraffin will go down by 46 cents a litre. To talk to me about the impact of this recent fuel price adjustment on the South African economy, I am joined by Hart, the Executive Chairman of Impact Investment Africa in Johannesburg. It's good to have you here on Energy Frontiers.
Thank you very much for the invitation. Thank you.
Now, so what will the latest fuel prices review mean for the South African economy?
Well, I think firstly, we need to understand that the fuel prices are adjusted every single month. And the reduction in the international crude prices has helped enormously to actually enable this drop in the fuel prices that occurred yesterday. At the end of the day, the average South African has really been really struggling under the combination of very high fuel prices, which have really damaged household spending, and the increase in interest rates, which has been very rapid and very quick and very steep. The extensive interest rate hikes and the high fuel prices have really knocked consumers back. We can see this in the economy. The GDP is not growing. And so the actual reduction in the fuel price now will give some relief. If the rand had not weakened, that fuel price decrease would have been significantly more. So what happened in the previous month, the rand weakened, but the international crude oil prices came down. The crude oil prices came down more than what the rand weakened. And so we're getting these price cuts. If the rand continues to weaken, right, and the fuel prices rebound, the international crude prices rebound, we may well see a bigger increase in future months. The currency is really looking it's struggling at the moment for the simple reason is that the economy is not growing. The debt levels are very high, so people are worried about the actual investability. There's policies coming down the line which are not very investor friendly, and on the diplomatic side, South Africa has been accused of helping to deliver weapons to the Russians, and that's also further increasing investor aversion to South Africa. We're on the grey list. So there's a whole heap of factors that South Africa needs to start doing to attract investment, to help stabilize the rand and get economic growth going again.
Right. Now, will this review cushion the impact of the rolling load shedding for South African households?
Not really. I think the only thing it could do is enable Eskom to afford a little bit more diesel and just reduce the load shedding from that point of view. But the actual effect largely is marginal. It's really something at the edges rather than something that'll affect load shedding in the actual substance. At the end of the day, the lack of performance of the actual existing power stations is going to be the most important factor in alleviating load shedding. And with our winter on, that's now come on, and it's a cold winter so far. It's the pressure on the power utilities resources is going to really stretch South Africa's, South Africa's power grid, and to a large extent the patience of the average consumer in South Africa.
Right. Now, supermarkets in South Africa spent some 3 billion rand between October 2022 and March this year on diesel. Do you see any relief for them in the near to medium term?
Well, this is some relief. I think basically, again, we've got two counter forces. The fact that we've now really entered our winter period, and we're only at the beginning, is going to put pressure on the grid, and I think load shedding is going to increase, which of course means that the supermarkets are going to have to burn more diesel. The problem is that I think diesel, to produce electricity via these diesel generators is about triple the cost of just drawing it off the grid. And so the actual reduction in the diesel price is not going to help that much. It helps a bit, but doesn't help that much, especially if load shedding is going to escalate because of the winter. That will take any advantages of this particular price cut out of the window.
I know you spoke about the rand being trading lower against the US dollar, but can you speak to me about how will that impact fuel prices?
Well, the weaker the rand is, South Africa is a fuel importer. It's certainly on liquid fuel, liquid petroleum. On crude oil, we're importers. On coal, we are exporters, but on the fuel, we are importers. So we have to pay rand for those, for the international imports, and that is priced in US dollars. So when the rand weakens, we have to effectively pay more for our fuel in rand terms to compensate for that weakness in the rand. And that, unfortunately, is something that has really hit South Africa very hard. Inflation has been rising. One of the big factors of that has been the weaker rand over the past 6 months or so.
Now, we have energy problems, transitioning, renewable energy, fuel prices, but is lower fuel prices the silver bullet for resolving South Africa's crunching energy problems?
Well, it helps because it puts money back into consumers' pockets, which helps the economic growth, and that, in a sense, higher economic growth will help with the rand. Weak growth and high debt levels are part of the reasons why the rand is weak, because of the increasing risk that gets associated with that. South Africa has to grow. Our unemployment rate is too high. And so, the fuel price cut helps quite a bit, but it's not enough. We've got to see some policy changes as well to attract investment into the country.
Right. I hear you. Thank you so much for those insights into the latest in South Africa. Chris Hart, Executive Chairman of Impact Investment Africa, on our Energy QuickChat this week. I am Justina Okechukwu. Bye for now.